Supreme Court. Let's now move to our monthly M&A special, and this time we're looking at the M&A picture during the first quarter of the year. Lahiri, Partner Transaction Advisory Services at Thornton, joins us with a detailed report. Raja, thanks very much for joining us. It's not looking good in Q1, is it?
Yeah, it's not looking good at all. If you look at the total picture, M&A is pretty much down. So is private equity. But again, what is interesting to note is if you look at the total deal values, we're at $4.5 billion of M&A this year, which is down from $17 odd billion same last quarter of last year. But if you look at last year, there was a huge amount of internal mergers and restructuring. So if you take out that piece, we actually see an increase in the M&A activity as far as the values are concerned, where it's largely driven by one large inbound transaction in the pharma space. But again, if you look at the private equity space, it's down by 39% compared to last quarter. So yes, it is definitely down, and the overall slowness of the macro is creating an impact on the M&A and the PE scene as well.
Yeah, absolutely. I'll get to private equity in just a bit, but Raja, you were talking about how the inbound transactions have actually been skewed by one particular transaction. But there's been so much talk about corporate India looking outside, looking beyond borders because of how difficult it is getting to do business here in India. What's the picture looking at in terms of outbound deals, and do you expect the numbers there to go up significantly through the year?
Yeah, it's a great point. I would say, as far as outbound is concerned, clearly, as you rightly said, people are looking at certain economies, especially like Europe. However, if you look at from an outbound perspective, debt is not pretty cheap. Debt raising is not easy. Fundraising is not easy. So I would say the larger corporate groups are looking at outbound quite selectively, though, because in my view, the fund situation is not all that great. However, saying that, I guess sectors like IT, ITES, in terms of power, natural resources, mining, clearly would be sectors to watch out for. In my view, there are pretty interesting assets available in the Europe region as well as the American region, and hopefully with some momentum coming in, we will see some action. But as far as the numbers go, till now, we haven't really seen much outbound activity so far.
You were talking about private equity and how we've seen private equity transactions also drop dramatically. Besides the fact that there is this general malaise in the Indian economy, what seems to be bothering private equity? Because the conversations that I'm having with people is the lack of exit options also seems to be weighing, and of course the tax constraints and the tax and the regulatory environment seems to be weighing in on private equity when it comes to investing in India.
Absolutely. If you look at from a private equity perspective, I think one of the key issues the industry is possibly facing is about exits. So clearly returns is about returns to investors, which is primarily the important aspect of private equity. So exits have become difficult because of clearly the IPO market and the inbound story getting a knockdown, obviously impacting the exit scenario. But what you see also, if you look at the deal scenario, where the money is going into. If you look at the private equity perspective, the money is going into certain interesting sectors like renewable. Despite all of this being said, I guess we saw GIC putting $150 million in Greenco, in the renewable energy space. We also see clearly interest in the banking and financial services space. So there's going to be selective investments. However, I guess what we would see is exits being a key thrust this year for funds, and what we are seeing is also in terms of from a deal momentum perspective, and a couple of things that we see is management buyouts and secondary transactions creating management majority stake funds buying out clearly would be the focus of this year. If you look at Blackstone, for example, they picked up stake of 50% plus in a cement company. So clearly management buyouts and leverage buyouts could see some interesting dynamics this year.
Right. So essentially what you are saying, Rajan, if I heard you correctly, it's not so much the general economic slowdown, but it is other issues which are impacting both inbound and outbound transactions, and it really has to do with the constraints on both the exit options, the tax constraints that we're facing, and of course an adversarial, hostile climate that seems to have been built up around doing business here.
Yeah, again, absolutely right. There are obviously much deeper factors here. But again, I remain positive because, some of the regulations that have happened, especially in certain sectors, the FDI, for example, I think are positive steps. And I would see some of these things hopefully gathering some momentum as we move along this year. For example, the pharma space, if you look at it, we had a $1.8 billion deal of Mylan picking up stake in the Strides asset in India. So I think selectively you're going to see some large transactions on, and I think that's very important for us from an economic perspective. But as I said, yes, there are deeper factors which definitely needs to be resolved. But overall, I would see if some of these steps are gradually, taken into consideration and implemented, I think the climate should improve, and we would hopefully see more deal activity going forward this year.
Well, let's hope we have a better Q2 than we did a Q1 as far as Deal Street is concerned. Raja, always a pleasure speaking with you. Thanks very much for joining us here on CNBC TV 18. That's a quick check on Deal Street. But again, just to revisit the story that is breaking on your screens, Ravi Ruia has